Thank you, Sendil Kumar sir, for the introduction. Thank you, Murugesh sir, branch chairman, and also all the senior members and my colleagues who are available and friends. So Tirupur branch is always it's always a always ever energetic branch, and so it does a lot of programs. And our association with Tirupur branch is very close, and I've been there quite a few times. So again, thank you so much for this opportunity to share our thoughts as regards the recent developments are concerned. More on the the technical aspects of e-invoicing, etc. So my teammate Dinesh will take over. But more I'll talk on the legal aspects, and there are some recent points which we need to consider. In fact, as Murugesh sir pointed out, there are some points on ITC, etc., which our experiences we will try to share it, and some of the though we have some litigations in the Madras High Court on some of the matters, which could be some of the key issues or learnings for all of us. So I'll just try to highlight those aspects also as part of our discussions. And okay, everybody is aware that e-invoicing from 1st April 2021 is applicable for entities having turnover, aggregate turnover exceeding rupees 50 crores. And it says any of the preceding financial years. It means it could be financial year 17-18, 18-19, 19-20, or even for that matter 2021 also, because this is getting implemented from 1st April 2021. It means all the four of the financial years is relevant for the calculation of the 50 crore. Any one of the years, if it crosses 50 crore, then e-invoicing becomes mandatory. So it means, in fact, government has also enabled automatic e-invoicing now. I mean, in the sense that those accounts has been enabled. But one thing is that for 2021, if somebody is going to cross 50 crores, then for them, presently, our experience suggests it has not been enabled. But there is an application form, voluntary application form through which they have to make an application for enabling the e-invoicing facility in their login itself. That facility has been provided. So if anybody is going to cross 50 crore this year and not happened in earlier years, they may have to use that to request for that enabling of the e-invoicing provision. So that is e-invoicing facility rather. That is number one. And of course, some of the locations there could be line sales happening, where line sales could be we clear goods and delivery challan from the factory, and then they will know the actual sale only when when they reach the shop, etc. So in which case it goes through only delivery challan process. E-invoicing in those cases, if they are crossing 50 crores, has to be required only at the time of actual invoice day. So the due date for e-invoice is the same as the due date for the actual invoice typically. And of course, there are practically challenges. For example, I raise invoice today's date. Can I raise e-invoice after 5 days or 10 days or 15 days, etc.? So practically, it is happening. In fact, system is also kind of permitting that gaps. But then, definitely in future, the challenges will be there when the recipient is going to take input tax credit. Later, due to mismatch, there could be an issue on taking credit for the recipient. So it's advised that the invoice is raised parallelly or at the real time of raising the actual invoice. Though system is permitting, there is a gap of about, in fact, 2 days. The GST and CEO has told that system slowly will be tuned in such a way that only it is permitting only till the next day night. So that's roughly about, we would say next day night, today and tomorrow, like that. But then now it is allowing for multiple days also. But care has to be taken that invoice is raised parallelly or at the best before movement. In fact, for movement of goods, it has to be raised before movement of goods. So it means if somebody is raising an invoice, physical invoice, they took the goods and then after that they are raising e-invoice for customer purposes. Technically, it is a invalid transaction. Means it is basically movement without valid transaction. So it will be questioned. So especially for movement of goods, e-invoice has to be raised definitely prior to the movement commences. So that's a mandatory requirement to ensure. And the 50 crore is based on aggregate turnover. So yesterday, one of our clients called up and asked, in our books, the turnover is less than 50 crore, but GST return shows it's more than 50 crore. Should they go for it? The definition is based on aggregate turnover. So that means naturally, as per the GST, is what we need to consider. Aggregate turnover includes exempt, taxable, all inclusions are there. So we have to consider, including exports, has to be considered for calculating the limit of 50 crores. Though, exemptions are given for specific transactions, but in general, the aggregate turnover crosses 50 crores, e-invoicing becomes compulsory. And of course, if the goods are moved without e-invoice, it's a transaction without valid documents. If there is a detention, I must bring to your notice some of the key important parts. Of course, the direct tax changes would have been already covered as part of budget session, but there are some few points which this budget has indicated, which could be highly impactful if e-invoice is not properly raised. One of the major changes they have done in this budget or proposed is that section 129 has been amended, which deals with detention and confiscation of goods. Basically, check post somebody holds the goods. Then what happens? Presently, the procedure is they will put, if it is without invalid documents. When you say invalid documents, if it is with invalid documents or without documents, which means if there is a e-invoice to be raised but they have not raised it, it's also invalid documents only. So in such cases, the present tax is 100% tax plus 100% penalty. That's how it is being raised. That means like 1 lakh tax, 1 lakh penalty. But the new proposed tax, the penalty, of course, will be notified after the all central governments, all state governments notify, is that it has becomes 200% of the tax will be the penalty only. So there is no tax component involved for any detention. It means in the pre-amendment scenario, it is 1 lakh tax plus 1 lakh penalty. Post-amendment scenario, it is going to be 2 lakh penalty. That's all. There is not tax. Normally, what we used to do is that tax amount we will adjust when we are going for normal return filing. At that time, we used to adjust that. It's like an advance tax. We used to adjust it, or we will declare that turnover in DRC3 and adjust it. But now, post this amendment, it is going to be 2 lakhs penalty. There is no tax component. So, and of course, with an appealable penalty. And when you go for appeals, it is going to be 25% pre-deposit has to be done. Normally, in appeal provisions, pre-deposit is required only when there is a tax demand. If you look at the appeal provisions, the pre-deposit is only 10% or 25% of the tax component only. Penalty is not considered for calculating the appeals pre-deposit. Even prior law, when they used to say only penalty was there, they used to say penalty you have to calculate pre-deposit. But in GST law, if there's a tax and penalty or only penalty, only on the tax component alone we have to pay pre-deposit. But then if now the amendment says that if the penalty is paid because of the detention or invalid documents, then 25% of the penalty shall be the pre-deposit also. So there's a double-edged impact is there. So because of that, it's quite important that the e-invoicing has been properly carried out. And whether does it impact practically? Yes, as you there are practically a lot of challenges some people have faced, like one invoice raised, but double time it has got accounted in GST R1, or we raised on one date, customer received on another date. So there are some issues are there. Of course, more on that the next speaker will address. But first point we need to address or make sensitize the dealers or the traders is that without e-invoice, there is going to be a huge impact on the detention and penalty provisions. That is the number one impact which we are going to have. The second major impact, which the e-invoicing provision, as I told you, the 50 crore limit is as per the government's data itself, we will have more number of companies coming into this. Whether branch transfer should be included for 50 crores, of course, yes. If it is treated as a supply for GST, then naturally that 50 crores has to include branch transfers. The 50 crores has to include the deemed supplies. So whatever GST returns reports it, everything has to be considered for calculation of this limit of 50 crores. And whether GSTN as a facility, etc. Of course, some of you might have had the experience. GST itself has given an offline tool for the same. How to generate, etc. has been in fact explained. But of course, it takes a lot of time to go through the GST portal. Some of the issues, especially on input tax credit, the e-invoice arises is, let's say my e-invoice, my physical invoice date is 28th of February, but e-invoice is generated on 1st of March. What will be the relevance of taking input tax credit for the recipient? When input tax credit can be taken by the recipient is one issue which will come. As I told you, without an IRN number, it is not a valid document at all. So only the IRN number decides the validity of the document. So if there is, let's say, change in months because of the difference in IRN months, technically it should not be there. It should be same date or real time. But if at all, IRN was generated a little later, then in such scenario, definitely input credit will be eligible only in the subsequent period and not in the previous period. So it's also important that there's no spillover, especially month end transactions. Let's say we are March month. Now, March month transactions, if there happens to be a spillover happening to April, then in generation, or of course, March month, there's no requirement to generate IRN. But April month spillover happens to May. At that point in time, the validity of the input tax credit for the recipient will also end up in problem. So we need to have a cutoff procedure, just like we used to have audit cutoff procedures. Especially month-end transactions, we need to be very careful and advise the dealer that IRN becomes generated real time. Otherwise, we will have a potential impact in terms of eligibility in the hands of the recipient. One of the issue which was taken up was whether that 110% rule, like there is a specific rule, Rule 36 sub Rule 4, which was talking about the recipient can take input tax credit only to the extent of earlier it was 120% from October 2019 to December 19. From January 2020 to December 2020, it was 110%. And now from January 2021, it is at 105% of the invoices, eligible invoices reflecting in GSTR 1. So this is what is the amendment Rule 36 sub Rule 4 was talking about. And of course, it has created a lot of working capital challenges for few where suppliers are not putting. In fact, by nature itself, many people are going for 3 months once return filing, and our person will be going for a monthly return filing. In this case, also mismatch is there. So whether that rule which is there, on which date we should consider, number one, that was the first point Murugesh sir has raised. And whether, okay, to make it clear, the Rule 36 sub Rule 4 did not have a legal backing, technically speaking. It has already been challenged. Most of you must be aware that it has already been challenged in most of the high courts, including the Madras High Court. Now, we have a few cases in Madras High Court on this matter, where it has been challenged on the grounds that Rule 36(4) is now beyond the powers of the section. The enabling section is section 16 of the GST law, which talks about taking input tax credit subject to conditions. Now, the conditions talks about the 4 conditions. Central government has been given empowered powers to take input tax credit in the manner and form as prescribed by central government. So the powers are given to the central government only to decide the form and manner in which they can take, like which form, or electronic credit ledger, online or offline. So that kind of form has been given. Manner means how you are supposed to take the credit, etc. Now, but restrictions, is something which the central government has not been empowered to do, especially when it talks about 5%, 10% restriction, etc. So what happened? This has become quite relevant because of the budgetary amendment they made. So this has become very important. I would like to draw your attention to an amendment made in this budget. Most of you might also have seen in Rule 16, Section 16, in subsection 2, they have added one more clause now in conditions, where it says that the amount of credit to be availed by the recipient shall not be more than the credit which is submitted by the shall be more than the prescribed percentage of credit as notified by the central government as submitted by the supplier. Now they have added this clause. If you find in the budgetary, of course it's not notified because only central government has brought this point. So this amendment has been brought in section 16 subsection 2, which means they have foreseen already challenges. Already there are a lot of challenges to this rule in various high courts. So already the law did not have the powers to enable Rule 36 sub Rule 4. So there is a very strong view that 36(4), which gave the 5%, 10%, etc., is ultra varies the provisions of the CGST law itself, And that is also one of the reasons. In fact, GST Council minutes also discussed about whether Rule 36 Sub Rule 4 is valid or not. Considering that, they have recommended one of the amendment in the section 60, because any amendment in the section can be only on recommendation by GST Council. So if you happen to see the GST Council meeting minutes, one of the recommendation is to amend the section 16 to enable or empower the central government to notify the percentage of credit which can be availed by the recipient. Also noting the fact that though trade has challenged the ultra virus nature or virus nature of the Rule 36 sub Rule 4, though government tries to protect, there is possibility of lack of provision. The government has brought this amendment in the section. So first point to be clear is that the 36.4 itself is a matter of challenge. So which means if you are getting a notice on the ground that it is you've taken more than that, my suggestion would be, if you have taken more than that, maybe not use it, but avail it and keep it in the books of accounts to keep the credit alive. So if you don't take the credit itself, then we lose it in the first place. So the 36.4 rule becomes all the more controversial because of the recent budgetary amendment the government has introduced as part of section 16 subsection 2. So in this context, if you look at the 105%, 110% itself has been a question mark. More so because it's an unenforceable rule in certain cases, in the sense that when on one side, the government says that, the supplier can file quarterly returns. On the other side, the recipient says he can take only what is available in his 2A. It becomes, unenforceable rule by law itself. In the sense that, in fact, there are enough precedents on this matter where a rule, it becomes impractical to follow, has to be mellowed down in the context of that the practicality. So as such, this particular provision, leave alone whether 2A or 2B to be taken, whether the rule itself is valid has been already challenged. So in my view, it might could be questioned, and there could be some judgments coming up in the next few maybe I would say 1 or 2 months on this particular matter. So I would request to keenly follow this point on 36 for validity itself. So that is number one. So in case if somebody has taken credit more than what is available percentage, or not at all taken the credit, our suggestion would be to take it and of course not use it, so that you will not have interest impact on that credit. The department may take a stand that it is you have taken a wrong credit and pay penalty, etc. But not the interest portion, but penalty if they want to invoke. But then this is a matter of high litigation and interpretation. So in such scenario, levy of penalty is also not warranted. So if you think there's a considerable difference between what is available in 2A and what you have taken in 3B or eligible in 3B, it could be a matter of dispute. So you may take the credit and not use it. That's one point, so that you are not lapsing that credit by not taking it within time. So this is one issue which I would like to immediately place it for the forum for your thoughts. That is number one. Number two is that another major issue which we are facing. I'll put the analogy before discussing the second point. Let's say somebody has taken the credit, but again, so typically you will start receiving notices where when they filed returns belatedly but taking the credit. So let's say for the month of financial year 18-19, the taxpayer would have filed his returns by February 2020, example, February 2020, taking the input tax credit of 18-19. Okay, so you also might have received a notice, the taxpayer might have received a notice or may receive in future saying that your taking credit itself is invalid, because 18-19, the time limit of taking credit was September 2019, whereas you have actually taken the credit only in the month of February 20 in your GST 3B. So only when you take the credit in 3B it is valid, and hence it is time barred. Pay the tax, but you are not eligible for input tax credit. Possibly you might have received notices. In fact, some of our cases they have received. It is quite natural to have that notice being issued. So what is a question is that whether the time limit of you have that credit availability of September month. You have to avail the credit on or before September month due date of filing returns. It has lapsed. So is it valid or not? That's the question. In fact, in service tax law also, you had this time limits. In fact, credit rules had a time limit of 1 year. It was earlier 6 months. They increased it to 1 year, etc. So there are 2-3 questions which has now been arisen on this matter. Number one is that whether it is legally okay to have the time limit prescribed for any credit to be taken. Okay, because any credit taken is not a right; it is only a benefit. There are enough judgments on this matter that if the law is giving you an input tax credit, that input tax credit is like a bonus given by the law. There is no rule that input tax credit has to be given to you. Okay, that's what is the enough judgments on earlier. In fact, in TVS Industries in VAT case itself, when there was a challenge to section 19, where they said reversal has to be done for non-payment or for lesser tax payment, there are enough judgment where the Supreme Court has ruled that input tax credit is not your inherent right. It is not like a fundamental right. It is something which the law has given a benefit to you. Conferred benefit is a right, but the giving right or not is a matter of the parliament to decide. So any credit which is given to you, not giving to you, is a option, is a decision of the parliament. You should take it. You cannot challenge why I am not given you credit for this or that. You cannot challenge that. But having given, it cannot be taken back retrospectively. That's the precedence or position in this context of input tax credit. So in this scenario, in this background, whether the time limit is valid or not has been already debated in quite a few earlier judgments on Senvat credit, where they held some of the cases time limit is valid. But then there are enough judgments in this Senvat credit rules where the provision was like the taxpayer did not register because he was not aware that he should pay the taxes, so he did not take credit also. But then after a few years, when the legislature, the government wanted to levy tax on them, like it was liable, but they did not pay. When they issued the show cause notice, the taxpayer wanted to take credit at that time, saying that, had I been aware of this liability, I would have taken the credit. There are enough matters in the tribunal and the court where they have allowed credit for that period, because at that time when the tax was not charged, he was under the impression that it is exempt. So retrospectively, credit has been allowed where there was a demand for liability. Though there was a time limit imposed for 1 year, retrospectively the credit was allowed, of course through litigations only, it has been allowed. So in a scenario like this where time limit has been prescribed, though there's a challenge that time limit itself should not be considered, there's another challenge also. What is meant by taking credit? Okay, whether taking, because the wording used in the law is taking credit, not taking credit in electronic ledger, but the wording used is taking credit. There is a Karnataka High Court judgment on this matter in Senvat credit, where they have made an observation that taking credit does not necessarily mean in the service tax returns. In that context, it was excise returns, but it is also books of accounts, is the judgment by the Karnataka High Court. Maybe if somebody wants to, take that judgment into consideration, and also the word taking credit wants to be interpreted that way. In fact, in fact we have yesterday, a few days, we have a case which is getting filed on this matter of taking credit. So it's not only taking credit means in the electronic credit ledger, but rather taking credit in the books of accounts also amounts to availment of credit. So on this ground, there is a challenge, and in fact Karnataka High Court, there's a favorable judgment on this matter of the word called taking credit. So so if somebody has properly availed their credit in their books of accounts, then whenever the show cause notice is issued, there could be a fair possibility of I would say not, there's no question of defending it at the lower authority, definitely not possible. But then at the higher forums, there is a possibility of favorable judgment on this matter. So that is the second. It's a potential case for litigation, and not to lose the give it up at the lower authority level itself. So taking credit can also be taking credit in the books of accounts. That's how the judgment has come. We'll maybe share the Karnataka High Court judgment at the end. That's the second point of time limit and taking credit part of it. The third one was, of course, there was especially when you're doing audit for 1920 financial year, we need to keep note of the key amendments made in the input tax credit rule. One is on food and beverages. There has been an amendment made in food and beverages provision where they allowed input tax credit if it is a responsibility of the obligatory of the employer to provide the food and beverages to the employee. So this amendment has been made. So I'm sure most of you would have taken note of it because the amendment was notified from February 2019 onwards, which means for 1920 financial year, when you're doing the the audit, you may look at whether they taken credit for any food and beverages also, because there is a slight, I would like to bring your background discussions on this point, your thoughts on this point. So it says it's where it's obligatory for the employer to provide the services or provide such food and beverages to employee, it becomes eligible. And in this context, of course, we need to refer to the Tamil Nadu Factories Act. In fact, Factories Act is a central law, but then state governments has been empowered to formulate rules as regards the implementation of the Factories Act is concerned. So Section 45 of the Factories Act says that you have to provide a canteen facility. In fact, 45 specifically mentions about canteen facility, and subsection 2 talks about the central government and state government can also formulate rules regarding payment, I mean giving food to the employees, price at which the food has to be given, quality of the food, the facilities that has to be maintained in a canteen, etc. So that can be prescribed with the state government. So correspondingly, there is a rule formulated by the Tamil Nadu government also, Tamil Nadu Factories rules, where they talk about the food, at which price it has to be given, the quality of the food, how much you have to recover. You should not recover cost. In fact, you should not make a margin. It should be a cost or less than the cost. So these points has been kind of brought out in the Tamil Nadu's factory rules also. So considering this background, I would request you to have a look at the factory's rules and look at whether, of course, this is mandatory only for employees more than 250. Most of you must be aware of that provision. So more than 250 employees, this becomes mandatory to have a canteen. Okay, whether it is required to have a food provided in the canteen is a matter of a slight interpretation, because the law requires canteen facility to be provided, but normally canteen facility does not mean giving only a location. I mean, any building can be a canteen if the intention was only to say building, but rather if they say canteen, naturally it comes with the understanding that it comes with the food also as part of it. So if 1920 audit is being taken, because 18, 19, 17, 16, 17 people, 17, 18 people might not have taken credit for canteen, etc., but that could become eligible as regards 1920 is concerned. So you may look at that provision as regards the audit point. That is one point. The second, I mean, this is about the eligibility issues which we were talking about. Then the next issue was, of course, on most of you must be aware of the amendment about the bus that also was notified in 1920 February, where again they allowed more than 12 passengers. They have allowed the input tax credit for buses and any passenger vehicle more than 12 passengers. So that credit also you may look at, because this was not eligible, or I would say it was matter of high dispute prior to February 19, but then it became quite eligible after February 19 is concerned. So this is another point you might to look at. The second one. Third one was in the context of building construction, where interiors, I mean, normally there's an understanding construction is ineligible. That's fair enough. That is fine. But then what is construction? Where we have to draw a line of construction is something which we need to look at, because normally broad people go with a broader understanding, construction ineligible. But then where do you draw a line for construction is something which we have to see, whether a centralized plant, whether a lift. In fact, we have an issue going on in one of our clients' case as regards lift is concerned. Whether a lift construction is eligible for input credit or not was the question, which is so naturally the obvious answer would be no, because it is part of building. But then if it is a plant and machinery, even if it is immovable property, it becomes eligible. That's what the section also talks about. So can a lift be considered as a plant and machinery? There are judgments on income tax law where it has been considered as a plant and machinery for section 32 and for the Income Tax Act. So there is every possibility that whenever it is a matter of construction, we cannot just like that draw and say that it's ineligible, but rather draw a line. And what about interior decoration? Is of course interior decoration is definitely not construction. There are enough precedents on this matter. Whether it amounts to addition, absolutely not. Addition, we are looking at addition to building. It's not an addition to building, but rather it's only a decoration of the building. So whether it amounts to renovation, no, it's not a repair. So which means interior decoration could be eligible for input tax credit. So what we need to do is that when you're looking at the eligibility part, draw a line of where it has to be construction and where it has to be beyond construction. So whatever is beyond construction could be eligible to ITC. So that issue also we may have to address at the point of the audit time. And when it comes to ITC, naturally, especially Tirupur, there will be a lot of questions of refund. Is another point comes in, refund of input tax credit. Of course, most of you must be aware that the time limit has been 2 years. That's the time limit they prescribed. And there's a big issue going on with respect to the time limit part of 2 years. In fact, the state governments have been, in our experience, the state governments has been granting without considering the amendment in the provision of time limit, while central governments has been issuing notices also. So the 2 years was amended, must be aware, on February 2019. 1st February 19, it was amended that 2 years has to be calculated from the export date and not from the end of the financial year. So the original provision on refund was you can apply for refund within 2 years from the end of the relevant financial year. That's how the provision was there for ITC refunds. Of course, many people would have claimed it by now, but then there can be issues on this matter. So February 19 was the amendment where they notified the amendment where they said it should be 2 years from the export date, not from the end of the financial year. In fact, this was also applied for inverted tax structure. Both inverted tax structure also, they said due date of filing returns, it has to be 2 years. And for, for exports, date of exports, it has to be 2 years. So there was a shift from end of the financial year, which means for 17-18, end of the financial year is March 18. From there, we had 2 years, March 20. For 18-19, if it was end of the financial year, it would have been this March 2021, end, 31st March. But then amendment made it as 2 years from the date of exports, which means naturally there is a reduction in the time limit. So we had a consideration of this matter in one of our cases where the department assessee applied effectively 2 years after 2 years as per the amendment, but then it was within 2 years if we go by the old provision. So if somebody wants to apply today, let's say we are now in 19th March 2021, it technically means we can apply only for exports made in March 2019. That's all. So then what will happen to the ITC prior to that? You cannot apply for refund. That's how the interpretation comes in. But then whether the amendment has to be considered prospective or retrospective has been in we had a case in Commissioner Appeals. Would like to discuss that point where whether the amendment has been prospective or retrospective was a issue, and it has been held as it is considered as a prospective amendment. In the sense that that amendment will be effective only for the periods, not even the refund claims, the periods commencing from 1st February 2019 and onwards. That means if you have the refund claims pertaining to periods prior to 1st February 2019, then that old time limit will apply, which is basically 2 years from the end of the financial year. It means we still have, which means when somebody has to file for 18-19, you can still file 18-19 ITC refund by this March 2021, going by the old provision, because only till, of course, not full 18-19, I would say till January 2019, because from 1st February the new rule is notified. So it leads to a kind of a unique scenario where if you have a refund claim from April to January 2019, you can apply on or before 31st March 2021, because 2 years from the end of the financial year. If you have refund claim of 1st February 2019, naturally it becomes restricted to 1st February 2021, so or March 2021. So there could be some unique scenario there, but then we can say that the time limit continues to exist till end of this financial year for those cases where prior to 2019 February also they have to go based on old time limit and not based on new time limit. There are enough In fact, VAT also there are provisions, and we had one case in the Commission appeals is also. Another issue which we quite often face, I just want like because especially it could be relevant for exports, is that on the export obligation side. So now we find a lot of notices being issued from DGFT for non-compliance of the export obligation. Like they took EPCG some 5-6 years back, pre GST scenario. They have to do 8 times export obligation, or advance authorization they took long back. They have to do value addition. If somebody has not done that, if what happens is some exporter has not achieved that export obligation, then naturally what happens, it will be lead. I mean, they have to pay tax now. Now DGFT has been issuing notices asking them to pay the interest and the old Senvat, I mean the excise duty, which was not paid at that time, and service tax, not service tax, primarily excise duty and CVD, which was not paid at that time. They are asking the taxpayer to pay it now. So what will happen to that money? Because had it been paid at that time, it would have been eligible for input credit. But now, because the payment is happening now, the input credit becomes completely ineligible. So in this scenario, what would happen is, so in this scenario, um, uh, what has happened is we had a situation similar to this. So where there's a specific provision in section 142 subsection 3 and 142 140 subsection 6 also. So these two provisions enabling refund of the the Senvat credit, which otherwise would have been claimed under the old scenario. I mean, had this CVD or as this excise duty or even service tax for that matter. For example, there was a service tax audit conducted now, and they asked us to pay under RCM, reverse charge mechanism, and we paid it today. But then, if it was paid at that service tax period, I would have taken input credit. Now, if I paid, I become ineligible. So, in that context, there's a specific section 142.3 which has been brought into force, and refund has been applied because saying that it's a refund of the Senvat credit, which has been should have been allowed because this was eligible Senvat credit, but then now it becomes eligible for refund through 142 subsection 3. Of course, we had this petition filed in at the officer level. Naturally, it was rejected, but the commissioner appeals level has been accepted. The commissioner appeals has granted refund in those matters using 142 subsection 3 provision and 142 subsection 6 clause A provision. 140 subsection 6 clause A, they have allowed refund of erstwhile Senvat credits which was paid during the GST period. So if you find some audits being conducted and tax being paid, this also could be applicable in case of VAT also, where VAT has been paid now, purchase tax especially. And in that context also, the credit has to be made, a refund has to be made eligible for. So this is a another issue which we find it recently. Another issue which is, as Murugesh sir pointed out, is whether input credit should be taken based on what date, basically based on 2A or it should be based on 2B, because 2A to 2B there's a difference. Everybody knows because 2A is a dynamic data, it keeps changing every day, whereas 2B is fixed, constant on 12th, end of the 12th, it gets generated. So that is a constant data. Of course, there is a government's clarification. In fact, not now. Even before there was a concept of 2B, the government had clarified it through a earlier circular in last year itself. They said that you should take, when this rule was introduced, especially in 2019 itself, when this rule was introduced, the government clarified that you should take the credit as appearing in your GSTR1 as on the end of this on the closing hours of GSTR1 due date. It means 11th at the or 12th morning, let's say. So on 12th morning, whatever input credit was reflecting, only that credit you can take in that particular month. This is what is a clarification given through circular in 2019 when this was introduced. But then there were a lot of challenges. Why? Because, which means what? How the officer will know what was the credit available on 11th. So yeah, let's say I declare this is the credit available on 11th. How the officer will know? Because he has no way to track that. How the department will know? How I will know? Because where the law says so in Rule 36.4 doesn't talk about specific provisions as regards date is concerned. It says whatever uploaded in GSTR1, you have to consider that for the information. But then it doesn't talk about which date should be considered for taking the credit. So the time limit was not there at all. Means the question was, can I take? There are people who take the credit based on 2A as available on 19th or 20th also. When there's a substantial credit difference is there between 11th to 20th, there are people who have lakhs of credit which gets lost. So what date was there? The law doesn't talk about all those things. There was only a circular which was given on this matter. Now, they have brought the 2B. So the 2B has been brought in, and the 2B is again a static data. So that becomes a static information on. And there is an advisory also on that one. CBSE also clarified through its Twitter that you should take only 2B as the basis for taking credit. That is, you are not allowed to take more than what is available in 2B. This is what has been clarified by the CBSE circular, CBSE advisory, I would say, on this matter. So 2A is not relevant. 2B is what is relevant to take the credit. So difference between 2A and 2B, if more 2A is there, you have to take only in the next month. You can't take it in the same month. This is what the advisory from the government is concerned. But then whether that is valid or not. So we always look at compliance, but first we have to look at whether it is valid in the test of law. So as we discussed, the time limit. So though law, assuming Rule 36(4) is valid, the Rule 36(4) does not empower, or I would say does not prescribe the timelines for taking the credit. But then that has been enforced through a 2B format. So if somebody wants to be absolutely compliance, assuming the rule is valid, it has to be only 2B data. So 2B is what is relevant. 2A is only for understanding purposes. Difference we will have to shift it to the next month only. So this is what we understand from 2A to B from the government. But then the time limit was not there in the law itself. So naturally, again, if you find any notices being issued on that regard, you may contest the same. Of course, if the amount is substantial, we expect some positive flow to come, because the powers itself was notified only now through the law. But then if you see, that was not a retrospective amendment, it's a prospective amendment only, which is going to be notified from the date notified later point in time. So in which case, for the past, naturally there is no enabling provisions available for this 2A, the matching concept as such. Another issue which we find, which already audits have started and departments notices have already been started issued, is on the context of input tax credit, where I take wrong credit. Let's say I've taken credit on car, which is ineligible. Okay, and the department is asking me to reverse it. We'll have to reverse it naturally. Whether should I pay interest at what rate? Can I have answers? What do you think? What is the rate we are supposed to pay interest? Should we pay 18% or 24%? What could be the rate do you think we have to pay? Anybody? I mean, of course, I would like thoughts from all of us. So, what rate do you think are we supposed to pay? You can also maybe put it in the chat box, etc. 18 or 28. So, what is your view on this matter? Because 18 or 24, sorry. So, there are two rates the section prescribes. So, the department, of course, talks about 24% rate. So there are two rates. So 18% talks about where there is a net output tax liability. Output tax liability. There's a tax liability, net tax liability after adjusting the cash balance, credit balance. Then on the net tax liability, interest has to be paid at 18% per annum. So this is what is section 50 subsection 1. And department invokes another section 50 subsection 3 for asking for 24% per annum, because that's the rate they have notified under section 50 subsection 3. On that ground, they are going for 24% per annum, saying that it's an ineligible input tax credit, and hence, in fact, we are quite a few audits where department has raised audit para with 24% per annum. But then we have challenged it, and of course, in some cases the department also has dropped it, that it cannot be 24% per annum, because the 53 provision cannot be applied at all for reversal of input tax credit. So reversal of input tax credit cannot come under 53, because a wrong input tax credit rather. So the department's view is that it's an excessive credit you have taken. So reversing it should be 24. But then the 53 is in a specific scenario. It is only when there is an excessive credit taken, and due to what? That has been mentioned there. That is because of non-matching arising out of section 42 and 43, and as which is arising out of section 38 and 37 and 38. So only if it is arising out of non-matching, and that too under 42 subsection 10, if you refer the 52 53, it will talk about 4210, and 4210 will talk about double reversal. So I mean second time reversal. It means that I have taken credit in GSTR 2, it is not applicable, so I reverse it. Supplier told, okay, sir, you take the credit, like that he told. So again, I took the credit. Again, the supplier did not file it. So again, I'm reversing it. So if there is a reversal for the second time arising out of mismatch, then 24% has to be applied for. So it is not in every scenario of reversal of credit, 24% can be applied. As such, it is only 18% per annum, if at all. In fact, there's a view you don't have to pay interest at all. There's another view, but I don't want to go into that extent. But then 18% is the interest which can be applied for, and not the 24%, because 24% is in a very specific scenario of matching and mismatch under section 4210. But then as we all know, 42 section itself is not yet notified, and even if it is notified, that was only arising out of the matching concept and reversal concept, not arising out of the issue of wrong credit reversed. So though the department's intention is that, sir, the intention of that section is any wrong credit reversal, you want it to be penalized. See, the intention and all, we have to go based on the law only. The law very clearly says reversal arising out of 4210. So this means it's only out of matching. If there's a mismatch, and because of that you are reversing for the second time, not even first time. You first time you took, you reversed it, and second time again you took, again you reversed because of mismatch. Only then the credit interest rate will be 24%. Otherwise, it has to be only 18% per annum, because 53 cannot be applied in that scenario. Only 53 empowers 24%. 51, if at all, applies only 18%. So it cannot go beyond 18% interest rate. In fact, state government notices have been conveniently issuing it at 24%. Even central taxes also comes with 24% only for wrong reversal of credit. It has to be, in fact, there are few audit bureaus where we had replied to saying that only 18% is payable, especially, let's say, including Tran 1 credit also. We had Tran 1 credit reversal also in some cases. The department has accepted the, of course, it was not litigated, that though there was no official clarification from the government on this matter, the department has accepted in a few audit which was conducted, that it will be only 18% per annum. So possibly you may look at that aspect when you are going for reversal credit scenario also. And the next, so broadly, if you see, especially for 1920 year, even if you are advising it for reversal of credit, you may look at 18% instead of the 24% scenario also. One another view which has been taken on this, they said only on the net input tax, if you pay interest, that's enough, not on the gross input tax liability. Like if you're having gross input tax of 100 and you're having input credit of 80 rupees, you filed returns belatedly, then you pay interest only on the 20 rupees. That's what the amendment has been, the amendment talks about. But then the 20 rupees net credit, you should file the, I mean, the wordings uses in the relevant period credit, relevant period liability. That's how it has been shown. So there's a view which has been taken that if you are, let's say, to avoid late fee, you are filing nil returns for all the 11 months. And last month we are declaring the entire year's liability as well as the input credit. Technically, we have not declared that liability in the relevant month. Okay, and we have not declared the credit in the relevant months. It has been declared relevant period. Credit, okay, because it's your choice to take the credit up to the due date. But liability is an obligation to declare in the relevant period. If it has not been declared in the relevant period, then the department has been now issuing still interest. They are still demanding interest. Even if you are having credit, they are still demanding interest, saying that you have not, declared the liability in the relevant period. Okay, so this is because they have gone into the absolute level of I would say reading the between the words just for the revenue collections. But then in our view, it may not hold the test of law, etc. But then I'm just making aware that it's better to declare the income in the relevant period, so that of course it also has a side effect that your registration can be cancelled if there's a mismatch between 1 and 3B also. Now departments already started issuing notices on that matter. So considering these backgrounds, it's it's better please declare the liability in the relevant month returns. Even if you're filing belatedly, but declare it in the relevant month, not file nil returns to avoid penalty and then declare it in the last month. So that is going to be furthermore counterproductive. Of course, they will issue notice, they'll demand interest, you'll have to again litigate. So it becomes another matter of issue which has been brought in as part of the input tax credit interest issue. The next issue which the department, or I would say happening, is in the context of zero rated supply for SEZ. Okay, so we all aware that in fact the SEZ has given a list, only they are considered as authorized operations. So if the supply is not for authorized operations, then it is liable for GST. So this has been absolutely brought out now in the amendment made in section 16 of the IGST Act. So you all must be aware of one change which has been brought in. So till now what we kind of do is that we if you supply to SEZ, we don't charge GST on that supply, and we take input tax credit. Simple. That's what we were doing. But then now, there is a clarification given in the budgetary amendment, which you all must be aware, where they told that supply to SEZ only for authorized operations will be a zero rated supply. So earlier it was only saying supply to SEZ. So we used to take credit whether it is authorized operations or non-authorized operations. We used to take that benefit. Though technically SEZ always gives benefit only for authorized operations, and we all are aware that SEZ authorized operations is only 66 in number. Other than the 66, if somebody is doing anything, they have to get a specific endorsement from the development commissioner from the SEZ. Otherwise, it is liable for GST. We have to understand. You cannot say that I filed LUT and then I will avoid GST. It's not the case. We have to pay GST. It is not even zero rated supply. It is a normal supply only, and SEZ can take input tax credit. So let's take the example. We had one few cases like that. Let's say this company was running a daycare facility for the employees of the the SEZ unit. This company was doing a food for the employees of the insurance, general insurance, etc. So in all those cases, general insurance was covered now in authorized operations. So wherever it is not authorized, like the daycare facility, so it's not an authorized operation. It means it is not even a zero rated supply. It's a normal supply only. LUT benefit cannot be obtained in that regard. So this is what is the clarificatory amendment made in this budget, but then it's a clarificatory or it's a substantive amendment. Only the later decisions can tell. So these are some of the important issues to consider on the input tax credit side. And of course, now they told that you have to pay 99% only. You have to utilize the credit. The 1%, you have to pay through cash compulsorily. But then you'll have to see. Most importantly, if you have claimed a refund, you can go for full utilization. But again, what type of refund? They're talking about only the input tax credit refund side, and not the let's say inverted tax structure refund. That you cannot, that will not make you eligible. Or you have gone for refund of excess tax paid, that will not make you eligible. Only for the input tax credit refund, they have given this option for going for 100% utilization option. So so prominently in our view, in our considered view, of course, that's only for members' thoughts. Number one is that Rule 36(4) is possibly could be not ultra vires the act. So our suggestion would be to take the credit, not to reverse it, not to use it. So and then reverse it based on the further court judgments coming in. Of course, the government might make a retrospective amendment, but please note that if they have to make a retrospective amendment, it has to be from the law. And in the law, the corresponding amendment has been made only from a prospective effect. So that is one point which has to be considered. Number two is about, especially when you are doing the audit for 1920, please do consider the amendment made. One interesting amendment which was made in 2018 itself was on debit note. So let's say there is an invoice dated 1819 and the debit note was raised by our supplier, or we are raising a debit note our customer, either ways. Debit note is for price increase, and this price increase debit note comes with GST. So the government was saying that the time limit for taking credit on a debit note is based on the invoice date. Okay, so you all must be aware that let's say the invoice is dated 1819 and the debit note was dated let's say October 2019, then you cannot take the credit. Why? Because the time limit for the debit note credit, input tax credit on the debit note is based on the invoice date. The invoice date time limit is basically September, so it's gone. So somebody raising a debit note with the GST post the October 2009, September 2019, technically recipient cannot take credit because it was time bought. But then this provision has been amended and it was not notified for a long time. And in the long list of notifications in January 2021, government notified that provision also. Okay, so you must be aware that on 1st January 21, they made an amendment. The amendment in the GST Act was notified. What was the amendment now? Debit note credit, input tax rate on debit note will be based on debit note date and not based on the original invoice date. So this amendment was not notified till December 2020. It was notified now from 1st January 2021. So it means if there is an invoice, let's say related to, this is a very important point for us to consider, especially let's say there's a rate mismatch. So we have charged 6% instead of, 5% instead of 12%. So the department is issuing a notice to us for 17, 18, 18, 19, 19, 20. And your recipient is, let's say, eligible for input tax credit. The invoices are all dated 17, 18, 18, 19. But then if you want to recover it from your customer can he take input tax credit? Because the main point for the customer to decide is, if he can take input tax credit, there's no revenue loss for these two. If the understandings are good, there's no revenue loss for you. You will collect from him and pay interest, you will have to bear. But in case if he is not eligible for input tax credit, then you will be ending up paying money out of your pocket. That 7% or will be out of his pocket, supplier's pocket. Now this amendment has now made it possible to raise a debit note for prior periods also. It means what? If there is, let's say, an invoice dated March 2018 and department issued show cause notice on classification issue and they said you should pay the difference 7%. Then the debit note date can be post the I would say post this January 2021, and January 2021 you can raise a debit note for the difference 7%. The recipient is eligible for input tax credit because the amendment does not talk about the invoice date at all. What it says is debit notes raised after, I would say debit notes raised, that's all. It doesn't even talk about the date. The notification of the amendment is they have removed the clause debit note from the amendment. So what the provision in section 16 subsection 4 was that the time period for availing credit on an invoice or on a debit note pertaining to that invoice shall be the due date of September month returns or annual returns pertaining to that invoice. So that's how it was given. So now that amendment has been done wherein debit note date has been removed. So it has been considered as normal transaction only. It means if any debit note is raised, so there is at least a protection available for somebody who is now going to pay GST arising out of classification issue. The recipient can take input tax credit even if the debit note is related to period pertaining to 17, 18, 18, 19 or 19, 20, because the debit note date happens to be post January 2021. So of course, the question that arises, will the amendment be applicable for invoices raised after January 2021 or for the debit notes? The amendment has been made from the debit note context, not from the invoices context. And hence, this is a good protection available. So it leads to a unique scenario. What is the unique scenario? If debit note was raised prior to January 21, you won't be eligible at all. That it is lost because we have the time limit. If it is for periods pertaining to earlier, we had a case just recently, one case where ONGC said they have accepted for a higher rate, but then the supplier has been charging 5% only. Now the the customer says you raise differential debit note for 13%. Whether the recipient can take credit, the debit notes are dated post January 2021. The recipients would be eligible to take the credit. So potentially it will protect from classification issues, especially the first 3 years of classification issues can be kind of protected through this, provided of course recipient should be eligible to take the credit. If the recipient is not eligible, then naturally this credit may not be eligible. So this is another issue which which you may look at as regards the debit note point is concerned. And last point, with that I will kind of summarize my discussions, or I would close it at this level, is on the wording of 180 days condition. You all must have heard on this point. Is that 180 days you should pay, otherwise you will have to reverse input tax credit and take it whenever you pay that time. So there's no time limit for the taking of credit after reversing beyond 180 days. But then the wording used, of course, is the wording called fails to pay. It's not the word if somebody does not pay 180 days, you have to reverse. The wording used is not somebody does not pay, you have to reverse after 180 days. So the wording used is somebody fails to pay after 180 days from the date of invoice. Of course, from the date of invoice, fails to pay only is the word they used. But again, the word fails to pay has to be understood as the legislature could have only said if the invoice is not paid within 180 days, then you have to reverse the credit. It's a very simple way of telling it. Then why should have visualize a scenario of failing to pay within 180 days? So the word has been failure to pay has been has to be understood in the context of contractual obligations also. So there are capital goods purchases happening where there could be a contractual obligation, the retention amount or the 55% amount or 10% amount could be retained as a performance guarantee. So in those cases, your liability to pay itself will be after 1 year only or 6 months only. Especially, let's say, imports. In imports, when you're going for a 6 months credit period or 8 months credit period, etc., or you're opening an LC or you're paying through that, in all those cases, there could be failure to pay. Simple. There could be payment after 180 days, but you can't say that's a failure to pay. Okay, there is a compliance with the. I have paid within time. Okay, so the wording of failure to pay has to be understood in the context of contractual obligations also. So if the contract itself is for a period of 8 months or 9 months, there is no question of failure to pay. I have not failed to pay. If let's say I complied with the contractual obligations, I cannot say I have failed to pay. Okay, so because the law cannot enforce that you should pay within 6 months. The law can only say that if I fail to pay, what will happen? That's it. So the word fail to pay should also be understood in the context of contractual obligations and not merely based on the mere timing of 6 months. That should not be the basis for us to decide the classification. And of course, the last point, the time limit of input tax credit. We had one issue on this matter. So what happened? The SSC has imported, and 2 issues has happened. After the import has happened, the department demanded differential duty, and he has paid it. Okay. Now the differential duty was paid, let's say after 1 year, 1.5 years. For differential duty, they will not have. I'm talking about imports, so they would have paid differential duty, customs duty, and IGST. For that, there will not be a corresponding invoice or challan. There will be only challan. There will not be bill of entry, because bill of entry will contain only original amount. It will not contain the differential. Bill of entry will not be reassessed. It will have only the original. Let's say 1 lakh is the original amount. It will have only 1 lakh. Let's say difference I am paying another 1 lakh. That 1 lakh will not reflect in bill of entry because it is coming out of subsequent verification by the department. It will be only a challan. But normally in the challan, there will be a reference to the bill of entry, and you can take credit based on the challan itself, because of course there are enough precedents on this matter. So where there's a differential IGST paid in imports, then that differential duty can also be taken for input tax credit based on the strength of the challan, because it is not a fresh bill of entry, but rather it becomes part of the original assessment itself. Okay, so that's because assessment includes self-assessment as well as the departmental verification also. So there's a differential GST paid on imports that is also eligible for input tax credit based on the strength of challan, because this is another issue we foresee it. So I just highlighted this point. Now, what if the time limit of that September has gone? Let's say the original was March 2021, and my differential IGST was paid by December 2021. Of course, now we have an amendment in debit note. Okay, though that provisions can be imported or can be used for the differential GST also. Notwithstanding the debit note itself, we can say that time limit time limit will not apply in this situation. Only because of 2 3 points. There is a, of course, it is coming out of reading the law, is that the eligibility to take credit. If you see the documents for eligible to take credit, it says valid document. The recipient is having valid document, you can take the credit. Okay, they never say the recipient is having invoice, you can take the credit. They never say the recipient is having debit note. They only say valid document, and the valid document includes, what is valid document? It includes, there's a specific wording. It says valid document as a, in your input tax credit rules, it talks about invoice, debit note, bill of entry, and self tax invoice, etc. So these are all the points which are mentioned in rules where valid document has been mentioned for. So when you look at the time limit for taking credit, 16.4, it says the time limit for taking credit on an invoice or a debit note is so and so. So at one end, they told valid document for taking input tax credit, but when they prescribed the time limit has been prescribed in the context of an invoice or a debit note. So then what about so which means there is a obvious difference between what is the basis for taking credit and what's the time limit. Time limit, they never use the word valid document. So if it was a valid document, it would cover bill of entry also, but then the time limit provisions has been specifically mentioned in the context of invoice or debit note. So what about an import where the time limit has not been specifically mentioned there, where the time limit has not been, where the rule does not prescribe the time limit? It is of course open for litigations as such. But again, potentially my suggestion would be to take the credit and avail the same, because of course the same provision was there in the context of Senvat credit rules also, where they told time limit of 1 year 6 months. Again, Senvat credit rules also, bill of entry was omitted, and subsequently the credit has been held eligible in the context of Senvat credit. So we may have to refer to the precedents on this matter, because most of them are like copy paste from the old provisions of Senvat credit rules. So I would request you to kind of refer in that situations also. Yeah. So okay. So so to summarize, one, I would request you to look at 36.4. Taking it, of course, there is a risk involved, but again, not using it, so to avoid future litigations. Circular saying 2B is the valid document for taking the credit. And as I told you, e-invoice, especially you have to look at timing differences, especially cut off last day's invoices, so that recipient does not get affected because of the delay in raising the e-invoice. The recipient will land up in issues in that regard, and potentially there could be differences on that matter. And then we talked about 18%, 24% interest rate, how that applies, and especially 1920 amendments have been made on food and beverages requirements of the Canteen Act. And of course, in the context of construction, please delineate where it is ending and where you become eligible, etc. Of course, it's a very normal point to address. And then we talked about the EPCG defaults or advance authorization defaults, and consequently we are paying any duty out of that. 142.3 you can take leave under. Of course, we have one at a appeal level, on the Commissioner Appeals level, on that matter. The next one, of course, on the context of talked about the failing to pay within 180 days, and 16.4 time limit itself is as I told, taking credit has been already disputed. So wherever you find a notice, my suggestion would be to even challenge the same, because I have to compare this in the context of income tax also. Of course, though both these are indirect taxes and direct taxes, we just want to have a comparative analysis just to understand on the context of time limit. Let's say the department issues a notice for income tax. There is some income escaping assessment being done, and they find out that there is a income tax liability of 10 lakhs. Now, in that period, there is a TDS available for let's say 7 lakhs. So we have not filed income tax returns. Let's say we have not filed income tax returns. So which means what? It is there in our form 26AS, in our form 16, etc. But it is not there in our income tax returns. So technically speaking, we have not claimed the TDS. But then when the assessment has been taken up for consideration, the fairness demands, and of course, income tax department also considers the TDS as one of the tax payment in adjustment. So TDS is also adjusted even if you have not filed the returns on time, but department it takes up for scrutiny, or at that moment the TDS is also one of the credit which has been allowed. So if that particular context, of course, I have to tell this is indirect tax, very much aware of that distinction as such. But then having said that, the same principles could also be kind of brought into fore when we look at the GST also. Here also we have paid the GST. Similar to TDS, we have the Form 2A here where it has been declared as paid. And then I have forgotten or missed to take the credit. My costing does not include my GST credit. So considering all this context, naturally there has to be a fairness as regards the input credit point is concerned. So I would like to keep this in mind when you are looking at the time limit, especially provisions. It has been already challenged, and I'm sure this could also be a matter at your end also. Of course, the motor vehicle part, when question was raised on whether battery two-wheelers, there was an amendment to include electric vehicles, but I'm not sure battery vehicle has not been included in Motor Vehicles Act. Of course, electric vehicles has been amended and included in the Motor Vehicles Act. Battery two-wheelers, my understanding, it's not. Yes, if it is not a motor vehicle, yes, it is eligible for input tax credit. Of course, yes. Of course, you can say cycle also is eligible for input tax credit in this regard. So maybe I will I just touched upon few of the issues which we have practically come across on the input tax credit side. Though the more on technical aspects of e-invoice, co-speaker Mr. Dinesh can take over and take it forward. So on this note, I will close it here. There is one more doubt. Recipient debit note not available due to bankruptcy. Goods taken from shop supplied on 1819. Can our credit note ITC deductible? See, actually speaking, the recipient's debit note is not, in fact, valid document at all. The right document to take back the credit is only by way of a credit note with the GST only. So you will have to raise a credit note with GST. But then the time limit is now crossed. We are credit note. We are now in financial 1819. 1819, the credit note has to be raised on or before the 30th September 2019. But then the time limit has been crossed. We had a similar scenario like this where credit note was not raised within time. But then please remember that you are still eligible for refund. So there's last option, excess payment of tax. There's a very powerful provision in section 54 which talks about excess payment of tax. So especially in this scenario, okay, now only goods are, I'm just precisely coming to that point only. So the goods are taken back on today's date. So there are two options. Either that guy has to give a sale invoice to you. It's not, you cannot, the best option to do is that let him give a sale invoice to you, not a debit note, but rather a sale invoice saying that the goods has been sold back to you. And with that GST comes to you, you can take the credit. That is a easier option to do it. But then if let's say that guy is not able to do it, then you will have to raise a credit note. Those sales return is happening now. The credit note has to be raised with GST, and you can deduct the same. But then there are issues on deduction because the time limit is over. In such case, refund option is open. So you may have to go for a refund option in that scenario. That's it. Maintenance of building is eligible for input tax credit. There's no doubt on eligibility. You can take input tax credit on maintenance. Yes.
Sir, and one more query.
Yes, sir.
Regarding ITC 04. So here when we are applying for refund either on export or inverted duty structure, one proper officer has rejected the refund application for merely non-filing of ITC 04. Whether is it correct in law?
It's not valid, sir. Absolutely, it's not valid.
Because he rejected all the applications, refund applications, by mentioning non-filing of ITC 04. That is not correct, no?
Definitely not correct. So absolutely, there's no provision which talks about non-filing. We have to reject, and even otherwise, it's a harmless provision. So you can even file it today. So that is not impactful one. So I don't think there's no provision at all for them to reject.
He told that to make the dealers to comply with that filing of ITC 04. I'm doing like this, he told.
Ah, so that cannot be a reason for the eligible credit to be. In fact, the officer will be passed strictures if it's higher officers, or if you escalate this, especially to at the commissioner level, they will let into unnecessary strictures will be passed on the officer, because there's absolutely no reason for them to reject the credit on this basis. So it's beyond their powers. In fact, the officers, in fact, there's one more point is there, they are restricting themselves to 2A credit only. That is for circular. Circular says 2A credit.
Okay.
Already it has been challenged. How can they restrict it to 2A credit? The law itself has given a 10% or a 5% cushion. 2A credit cannot be rejected for. So in our suggestions would be that you apply including that. In case more than 2A, if you are having some credits with you, you please apply for refund and let the officer reject it with a speaking order saying that we will not go for circular, etc., so that it becomes an appealable order for you, and later if you find any favorable judgment coming in that matter, you will have an opportunity to go for refund. You can in fact apply for a rectification of the order also, because please remember, rectification has a higher timeline of 4 years, and judgments, especially if it's a matter of Supreme Court judgments or High Court judgments also, can also be one of the because it amounts to a wrong application of the law, can also be one of the grounds. So my suggestion would be that please don't restrict yourself relying on the circular, but rather apply. In fact, that services inverted tax structure, input tax credit on services, the Madras High Court also told, and offices circular also saying, government circular is also saying that you are not eligible to take the refund of the inverted tax structure on services. Okay, but then there is a favorable judgment in Gujarat High Court. Now the matter is at the Supreme Court. So our suggestion would be, don't restrict our claim to goods and loan. You claim it including services. Let the officer reject the same, so that there is always an opportunity for you to go for further claims or appeals or rectification when you find a Supreme Court decision on this matter. So in that view, it's always suggested that you apply as per our understanding of the law. That's it.
Sir, one more clarification.
Yes, sir.
Hello.
Yes, sir. Please go ahead.
Sir, regarding commercial building,
Yeah.
as you said, if it is used for let out purpose, we can claim building maintenance ITC.
Yeah.
If it is used for own purpose, we are not paying any GST. In such case, also we can claim maintenance input ITC.
Sir, what do you mean by own purpose? It means for your own office or for what? Residential or office?
Own factory.
Very much you can claim. There is no restriction. The restriction is only for any repairs you do and you capitalize it. Means you add it to the building cost. Only then it is allowed. Any repairs you can very much, building insurance, maintenance. If it is not capitalized, it is expensed in your books of accounts. Means the underlying value is expensed. You can claim the GST portion as input credit. No restriction on that.
In short, if we treat it as a revenue expenditure, we can claim both for let out or for own use.
Absolutely. Own use for office purposes, yes, you can claim. Yeah.
Office purpose and factory purpose.
Absolutely, absolutely. Yeah, business purpose, I would say.
Okay, thank you.
Thank you, sir. Thank you very much for your elaborate presentation on the concept of e-invoicing and latest developments in.
I've touched less on invoicing, more on the latest issues. But then we have a co-speaker, so I just thought I will hand it over to him. Yeah.
Okay, sir. Thank you. Thank you very much.
Thank you, sir.
Before I invite the next speaker for his presentation, I wish to introduce him for this August audience. CA Dinesh is a practicing chartered accountant specializing in GST laws, customs laws, and IT automation. He is involved in advising various Indian and global MNCs on GST matters with a special experience in banking, hotel, manufacturing, power generation, and automobiles. In addition to the core domain of practice, he have been actively developing free automation tools for GST purposes using Python and Python-dependent libraries. With these great words, I hand over the session to CA Dinesh.
Yes, sir. Thank you for the introduction. Very good evening to all senior members present here. So it's really a great opportunity to present our thoughts before you learned people. And I thank Tripur ICA for this opportunity. So Srinivasan sir covered more elaborate on this ITC part. So we'll be taking over through you through this e-invoicing part. So in today's topic, we'll be covering the basics of e-invoice initially for 5 to 10 minutes, and we'll also see how to generate a e-invoice JSON for uploading it to the portal and getting a proper e-invoice. And we'll also see some FAQs, like major FAQs, which people come across. So we will also deal with that, and probably we can close the session. So yeah, so hope my presentation is visible. Yeah, so invoices was introduced in the year 2020. So it was to be introduced in the date of like 1st April 2020. Whereas due to this corona situation, got postponed to October 2020. So initially it was introduced for the people, registered persons having a turnover greater than 500 crores, starting from 1st October 2020, and subsequently for the registered persons having turnover more than 100 crores, it was actually introduced from 1st January 2021, and now it's going to be introduced for registered persons who will be having a turnover of 50 crores starting from 1st April 2021. So this turnover, as Srinivasan sir said, this turnover shall have the same meaning as turnover under aggregate turnover under CGST Act. So include all the exempt supplies, whatever supplies we make, and also the branch transfers. So whatever we consider as a supply, that shall be considered for the purpose of aggregate turnover. And turnover. So, what are all the years that shall be considered for the purpose of considering this aggregate turnover is from the financial year 2017-18. So, subsequently, a notification was issued where it was told that the financial years that shall be considered for purpose of calculating this aggregate turnover shall be starting from the financial year 2017-18. So, in such case, in whichever preceding financial year, your turnover is exceeding the criteria. So mentioned by the notification, then you shall be to generate invoice. So what are all the transactions for which invoice has to be generated? So starting with the transactions that are to be for which invoice has to be generated is like B2B transactions, where registered person is selling to another registered person. Cases. So there's a separate portal for this e-invoicing. So we have to upload this JSON and generate this IRN. So e-invoicing has two components. One is this IRN, and the other part is the QR code. Whereas for the purpose of B2C, only in case of registered persons having aggregate turnover more than 500 crores, this QR code is applicable from 1st April 2021. So for what are all the documents e-invoice has to be generated? So GST mentions a lot of documents. Say for example, other than invoice, debit note, and credit note, there are such documents like bill of supply and invoice come bill of supply and self invoices, payment advices, receipt advices. So these are delivery challans. So these are some of the documents that are mentioned in this GST law, whereas the documents for which invoice has to be generated is only 3 documents. One is your invoice, debit note, and credit note. So debit note and credit note also, those debit notes and credit notes that is issued under this law. So not financial debit notes or credit notes. The valid debit notes and credit notes that is issued under GST laws, for which you have to generate invoice. And so certain sectors have been excluded from this invoicing regulation. So even though their turnover crosses the specified limit, so as now it's 100 crores and it's going to be 50 crores, even though their aggregate turnover crosses the limit, they shall be excluded from this generating this e-invoice regulation. So first is the insurance companies, and second is banking companies, including non-banking financial institutions. Third is goods transport agency, and fourth is supply of those suppliers who supply this passenger transportation service. So there's no mode that is prescribed, like whether it's by way of road or by way of air or by way of sea. So it's just mentioned as passenger transportation service. So by whatever means, if you are a person who is supplying passenger transportation service, you are not required to generate e-invoice, even if your turnover crosses the specified limit. And fifth one is cinema theaters. When they issue tickets, they don't have to issue e-invoice. And finally, SEZ units. So this final thing was introduced as separate notification. So SEZ units, when they are supplying, when they are exporting. So as I said, export for the purpose of export, you have to generate e-invoices. Whereas the SEZ units, if they are exporting, they don't have to generate e-invoice because they are exempted from generation of e-invoice. So there are a lot of methods for generating e-invoice. So larger organizations go for this API-based methods, so application program interface-based methods. So what they do is they integrate their system on a real-time basis with the invoice registration portal, or they integrate the system through something called GST Suvidha providers. There are some around 200 to 300 GST Suvidha providers registered all over India. So through them, they will link their system to the IRP, and these invoices shall be generated on e-invoices shall be generated on a real-time basis. So whenever they are generating an invoice in their system on a real-time basis, this e-invoice shall also be generated. So, and there is also free offline utility provided for the purpose of this e-invoice purpose. There is two tools. One is like it's called as GPP tool, and the other one is the Excel utility. So the Excel utility is like a normal Excel utility where you can like similar to GSTR1. For the purpose of GSTR1, there's an Excel utility where you can upload all the invoices, and by uploading you can generate a JSON, and you can upload to the portal. Similar to that, for e-invoice also there is a separate Excel utility through which you can actually generate a JSON for the purpose of generating this e-invoice. So further, it has been promised by NIC that they'll be launching a web app and also a mobile app for the purpose of generating this e-invoice. So probably it will be more convenient to generate e-invoices on a real-time basis if they introduce this thing. And so what is the flow of this generation of e-invoice? So what is the starting point, and what is the process for doing this e-invoice generation? So we'll just look at this picture that is given by the GSTN. So first, the seller, whoever is responsible for generation of this e-invoice, whoever has crossed the time turnover limit, they have to get themselves registered in the portal, IRP portal, so invoice registration portal. Similar to how they get registered under GSTN portal, they have to get registered themselves in the IRP portal. So not all the persons can actually get registered under the IRP portal. Only those who has crossed the turnover. So the IRP portal shall pick the data from GST portal, the 3B data, the 3B turnover data from the GST portal. So only those who has crossed the turnover limit of 500 crores or 100 crores, depending on the time limit, the time, it shall allow the persons to get themselves registered. So once you are applicable to raise a e-invoice, you have to get yourself registered in the IRP portal, and you have to either generate a JSON. So JSON through this offline utility, or you can also transmit the data through API. As I said, you can integrate your ERP to the invoice registration portal through a GST Suvidha provider, or directly you can link it. So both ways you can do it, and through API, that is through not through generating a file, rather than through something called as payload. So you can send the data to the invoice registration portal, and this invoice registration portal is similar to the GST portal. What it will do is it will validate the data given by you based on the schema. So there is something called schema. There's a structure. So for each field in this JSON, there is restrictions involved, and this IRP, it shall check whether the JSON generated by you and uploaded by you is a valid JSON, or the payload sent by you through the API is a valid payload. And once it's validated, it shall again send this invoice to the GST system. So some people would have noticed that once you generate this e-invoice, this e-invoices get transmitted automatically to the GSTR one. So this is because of this very link between the invoice registration portal and the GST portal. So the invoice registration portal, once it validates the e-invoice, it will send it to the GST portal, and these invoices in turn gets reflected in your GST portal. So once it is reflecting in your GST portal, once it's validated by the IRP, what IRP will do is it will generate something called as IRN, invoice reference number. So it's a 64 digit alphanumeric number. So it's called as hash. So it will generate this unique IRN and also a QR code. So it will generate, once it's validated, it shall generate it, and it shall send it to both the supplier and the buyer. So since the buyer is a registered person, this will be sent through the GSTR 2A. So once it gets uploaded in GSTR 1, it will automatically get reflected in GSTR 2A also. But whereas the status may differ depending on whether they have filed or not, it shall be showing whether it's submitted or not submitted. So this is how the flow of e-invoice happens. So both the it shall be sent to both the supplier and the buyer. And what buyer can do is with the QR code, you can scan the QR code and verify the validness of the e-invoice. So there is an app for this developed by the NIC. So you can use that app. You can scan the QR code and check whether it's a valid invoice. So what the app does is, like, it will cross verify the QR code with the data available in the invoice registration portal and check the validity of it. And if it is a valid invoice, obviously it will show it's a valid invoice. So as TR Srinivasan said, it's really a important thing for the buyer to cross verify whether a person is issuing a valid e-invoice, because only an e-invoice, valid e-invoice, shall be considered as an invoice, and depending on invoice only you can take your input tax credit. So if it's not a valid e-invoice, then the input tax credit you are taking shall also be questioned, and probably the department might demand you to reverse the input tax credit. So it's better for it's better that the buyer checks the e-invoices that are raised by the supplier. So also he has to ensure that if at all the supplier is required to issue an e-invoice, whether he is actually issuing an e-invoice. So there are ways to check whether a person is actually supposed to issue an e-invoice, but whether he's not issuing or he's issuing. So we'll just come across in a later point of time. So this is how the flow of very e-invoice happens. And so we'll just go through some FAQs. So whether e-invoice has to be generated for exempt supplies. So if you're making an exempt supply, so we saw in case of B2B transactions and for export transactions, e-invoice should be supplied. So I mean generated. So in case of a registered person supplying an exempt supply or nil rated supply to another registered person. So this is also a B2B transaction only. Whether for this purpose e-invoice has to be generated or not. No, it shall not be required to generate an e-invoice because for the purpose of exempt supply or an ill-rated supply, the document to be issued is a bill of supply. So e-invoice shall be issued only in case where you are supposed to issue a tax invoice and rather you have to issue an e-invoice because you are a notified person. So in case of bill of supply, you are not at all required to issue an e-invoice because the very document involved is different from an invoice. So in such cases, you are not required to raise a e-invoice. And similar scenarios where you are not required to raise an e-invoices in case of self-invoice. So where you are you are a recipient of an RCM supply, and for the purpose of input tax credit, you are raising a self-invoice. That is, you are mentioning your own GSTN and making a self-invoice. In such cases, you don't have to generate an e-invoice. And in case of payment vouchers or receipt vouchers, that is when you are receiving or providing an advance, in such cases you don't have to generate an invoice. And in case of delivery challan, so if there is a movement happening and such movement does not lead to a GST liability, so say within state you are doing a branch transfer, so within state it's obviously not taxable. So in such cases you will be issuing a delivery challan. So for that delivery challan, you don't have to raise a e-invoice. You obviously have to raise a e-way bill, but e-invoice is not required for that delivery challan purpose. And the invoice come bill of supply. So where there is a registered person, and for an unregistered person, he is supplying both taxable and exempt supply. So in such case, an invoice come bill of supply shall be issued. So for that, invoice is not required to be issued. Whereas a registered person is issuing, supplying both taxable and exempt supply to a registered person. That is a B2B transaction. A single document. In such cases, e-invoice has to be issued. So say for example, there is a this is like the standard example because a lot of liner industries are facing this. So if they are a C&F agent or something like that, there are two supplies provided by them. So one is probably an exempt supply, and another one is taxable supply. So in such cases, the exempt supply also has to be reported in the invoice, whereas the taxable supply, for that you have to raise invoice. Whereas if the exempt supply was supplied separately, there is no requirement for raising a e-invoice. So what if it is raised in a single invoice, both taxable and exempt supply, it is raised in a single invoice. In such cases, you have to raise an e-invoice even though you are supplying an exempt supply. So there is no concept of like partially raising an e-invoice. For one invoice document, you have to completely raise an e-invoice. So in such cases where both taxable and exempt supplies are supplied to a registered person, you have to raise a e-invoice. So second question is whether e-invoice has to be generated when you are supplying an RCM supply. So say for example, you are a security agency, you are providing security services, and in such cases whether you are not a company, body corporate. So in such cases the tax liability has to be paid by the recipient of the supply. So whether you have to raise an e-invoice. So you are a registered person only, and but you are not liable to pay tax because of the provisions of RCM. In such case, whether as a supplier, because you are making a B2B transaction, whether you have to raise a e-invoice means, yes, I have to raise an e-invoice because my if I at all my turnover crosses 100 crores, and in case of first April it's 50 crores, I have to raise a e-invoice even though it's RCM supply, except in case of goods transport agency, because it's specifically exempted. So through a notification, goods transport agency is specifically exempted. So even if GTA is providing an RCM service to a registered person, they are not required to generate an e-invoice. And in case of import of service, obviously the recipient of service has to pay the tax liability under reverse charge mechanism. So in such cases also, there is no requirement for raising an e-invoice. And in certain specific cases, like services where it is provided through an e-commerce operator. Like, plumbing services and, room rating services. So these and all, if it is provided through e-commerce operators, the e-commerce operators is required to pay the tax. So in such cases, these persons are not liable to raise an e-invoice. And in case of a supply by an unregistered person to registered person, under section 9(4), where there is a supply by unregistered person to registered person, tax shall be payable in case of notified persons. So in such cases, there is no requirement for raising an e-invoice because the supplier itself is an unregistered person. And in case of import of service also, the supplier itself is an unregistered person because it doesn't belong to India, first of all. Is a person outside India. So in such cases, there is no requirement for raising an invoice. Similarly, the recipient is not required to raise a invoice if at all he is raising a self invoice. So for the purpose of RCM, he'll be raising self invoices. So in such cases, he is not required to generate an invoice. Only the supplier of RCM services has to generate invoice. So can an e-invoice generated be cancelled? And can the cancelled invoice, corresponding invoice number for a cancelled IRN, can that be used again for generating a newer IRN? So first thing is, an invoice can be cancelled. Within 24 hours, you have to cancel the e-invoice in the IRP portal. So through IRP portal, the time limit for cancelling an e-invoice is 24 hours only. So once cancelled, you cannot revoke that invoice. Once cancelled, it's permanently cancelled. You have to raise a new invoice only. And after 24 hours, you don't have the option to cancel through the IRP portal, that is invoice registration portal. Probably you can cancel it through the your GST portal. When you are uploading the GSTR1, what you can do is you can remove the invoice from the B2B list of transactions, or if at all you have already filed the GSTR1, means you can amend it in the next period by making the taxable value 0. So that is the option available for you if you have 24. You can obviously raise against that invoice and also get a IR for the credit note also. So that way you can net off the transaction and cancel the invoice. So within 24 hours, it's possible to cancel an invoice through the invoice registration portal. And after 24 hours, there's no possibility. And whether partial cancellation or whether amendment is possible after generation of e-invoice. So partial cancellation is not possible. Only the whole invoice can be cancelled. Say for example, there is invoice which has 4 line items, like 4 different products I am supplying. Whether I can cancel only 2 products and retain 2 products means no, I cannot do that. I have to cancel the whole invoice and raise new invoice for just 2 products. So that's how I have to do it. And amendment is not possible. Amendment is possible only to the GST portal. So once IRN generated in IRP, I cannot go inside IRP and change the details of that IRN. The amendment can only be made through GST portal. And even if the amendment is made, the transaction shall be flagged for the purpose of verification by the officer. So that point should be noted. So probably flag the transactions. What they will do in audit means, like, probably they will filter the flag transactions and they may ask you why you have amended this particular invoice, so that you have to reason out the proper reason why you have amended, because it will be automatically flagged when you are amending an e-invoice through the GST portal in your GSTR1. So that has to be noted. And further, a corresponding invoice number for generation of IRN. So say for example, I have generated an IRN based on the invoice number GST 001. So this GST 001 invoice, I have generated an IRN and I have cancelled the IRN. So whether I can again use this GST 001 and generate a new IRN means, no, I cannot use this GST 001 invoice number and again generate an new invoice number, I mean new IRN. I have to use another GST invoice number, say GST 001A or something like that. I have to attach a prefix or suffix, whatever it is. I have to attach that and probably use it. There is no possibility to use the same invoice number which corresponds to a cancelled invoice for using it for the purpose of generating another IRN. So one point that was addressed by Srinivasan sir, this is very important point. Can IRN be generated after invoice date? So say my invoice date is 25th of March 2021, and can I generate an invoice on 26th or probably April month? Can I generate an invoice? Means no, actually what the law says is the invoice shall be prepared. So whatever invoice you are preparing, it shall be prepared after obtaining a IRN, which means that after uploading the invoice related details and getting it validated and generating an IRN only, you can prepare an invoice. So that means this IRN is the basic criteria for even the generation of the invoice. In such case, the IRN date cannot be after a date. I mean, it cannot succeed the invoice date. So it shall be always before generation of the invoice. So obviously the officer cannot check whether it was generated exactly before 2 minutes before or 1 minute before the invoice. Probably what you can very much do is whether it is same as the invoice date, you can ensure. So right now the portal is accepting post dated invoices also. That is even if the IRN date is generation date is after invoice date, it is accepting, but probably in the future dates it shall be restricted. And also the persons who are right now generating this invoices after generation of invoice, meaning IRN is generated after invoice date. In such cases, there is very much reason to levy penalty. So probably the officer may levy penalty because you have not generated a proper invoice. So it's a improper invoice. And there is also what to say? It's a limitation for the supplier, I mean recipient, because since the invoice generated by you is invalid invoice, the supplier cannot take credit. So we have to be very careful on this aspect. Whatever IRN we are generating, it has to be before or on the date of invoice, so that it's not against the very law. So that's how we have to check the validity of the invoice. And whether it is possible to check the invoice applicability of certain entities. So say for example, a company is actually supplying goods to you, and you are thinking that the turnover of the company probably would have exceeded 100 crores, but they are not issuing any invoices to you. And obviously you have to be worried, because if at all he issues us e-invoice only, it's a valid invoice and you can take credit on that particular invoice. So how to determine whether a company is actually registered, supposed to be generating e-invoice and it's not generating e-invoice? So there is a link for that. So einvoice1.gst/other/e-invoice enabled. So you can go inside that and check whether one particular organization is actually supposed to be registered but not registered, or whether it's actually registered. So this check how it is made is based on the turnover that is reported by the entity. So the correctness of the turnover might vary, because some entities, they do not report exempt turnover through GST or 3B. They might report it through the annual return only. But for the purpose of aggregate turnover, we have to consider exempt turnover also. So in such cases, what happens is the turnover reported in 3B might have been 97 crore or 96 crores. whereas actual aggregate turnover would have been 101 crores or 102 crores because of the exempt turnover which they are making, which they are not reporting in the GSTR 3B. In such cases, what happens is this very module, it shall say that it's not required to raise a invoice, but actually speaking, the entity should actually raise a invoice because it is exceeding 100 crores. So in such cases, there is no possibility to cross verify whether the entity is required to raise an invoice. We have to go by the entity say only, and the only way is through this portal. You can check it, and this is also, however, not it's a complete correct data. So there might be variations depending on the correctness of the GSTR 3B reported by the supplier entity. So can an entity suo moto register themselves in this e-invoice portal? Means no, they cannot register themselves voluntarily in IRP, except in one single case. In case of this 50 crores, what is the catch is this 50 crores is getting introduced from the date 1st April 2021. So in such case, for 1st April 2021, the preceding financial year is 2020 to 2021. So right now, if you just notice, you would have not filed the March month 3B. So what happens is the invoice portal is deciding your eligibility based on the 3B turnover only. So if you are not reported the March turnover, and say right now till February, your turnover is only 48 crores. So March turnover is 3 crores. So if you add March turnover, your turnover is exceeding 51 crores. So the preceding year, which is for the purpose of 1st April 2021, from which this 50 crore is getting notified. So from that date, if you check, means the preceding year is 2021. So if you include the March turnover, your turnover is exceeding 51 crores. But whereas as on the date of April, you would have only filed your February GSTR 3B. The last 3B which you would have filed is February GSTR 3B. In such case, there are chances that there is underreporting of income. So what this portal has done is they have opened a new feature where you can actually declare your turnover, that your turnover is exceeding 50 crores and you are supposed to raise a e-invoice, but since due to this GSTR 3B not filed for the purpose of March, for the month of March, you're not enabled automatically by the IRP. So IRP automatically enables you for generation of e-invoice based on your GSTR 3B turnover. If you are not automatically enabled, so this is the only way how you have to get registered. So you have to self-declare that your turnover is exceeding 50 crores and it shall be approved, and invoice generation portal shall be enabled for you. So post that, you can start generating invoices. Whereas those who has turnover less than 50 crores, say 25 crores or 24 crores, they cannot suo moto register themselves in this portal. Only when another notification comes saying that more than 20 crores, in such cases only they can register themselves. Only notified persons can actually get registered themselves in the invoice portal. And where can a registered notified person register themselves in invoice portal? So there is a link, invoice1.gst.gov.in. So there are 10 portals in total notified by the central government for the purpose of e-invoicing. As of now, only one portal is active. So invoice 1. So like that, invoice 2, invoice 3 till invoice 10 is there, but only invoice 1 is active right now. So there you have to get registered for the purpose of generation of IRN. So should e-invoice be generated for financial credit notes? So financial credit notes is something like credit notes other than credit notes that are covered under section 34. So say for example, the credit note time limit is due date of filing your GSTR 3B for the month of September, subsequent year September, it's the due date. So where you are raising a credit note after this period. So like 3 or 4 periods after 3 or 4 years after this very period, you are raising a credit note. So for the purpose of accounting, obviously you have to consider this credit note, but for the purpose of GSTR 3B or GSTR 1, you cannot consider this credit note because it's not a valid credit note under Section 34. So first, for such credit notes, whether you have to raise a e-invoice means you don't have to raise a e-invoice. Only for those credit notes and for those debit notes which are valid under Section 34, you have to raise a e-invoice. So as Srinivasan sir mentioned, the time limit for this debit note is actually delinked from the invoice. So even after period of this invoice, you can this September you can actually raise a debit note, and from this date of the debit note only you have to calculate the September period. So in such case, the debit note is delinked from the invoice. So in such cases, there won't be any concept of financial debit notes. So you have to obviously raise a invoice for all such cases. And subsequent question is whether invoice has to be generated for supplies between distinct persons, that is branch transfers happening between different registrations, different states. So I'm having a branch in Tamil Nadu and also in Karnataka, and I'm supplying either goods or I'm using a cross charge invoice for the supply of service I have made. So in such cases, whether I have to raise a invoice means yes, we have to raise a invoice because both the very applicability of invoices based on transaction B2B transaction. So this is obviously a B2B transaction, that is a transaction between two registered persons. So in such case, invoice have to be generated for branch transfers also. So supplies between distinct person also we have to raise a invoice. So there are scenarios where there might be branch transfer where DC shall be involved, that is delivery challan, and there won't be any invoice. So in such cases, there is no requirement for invoice. That is within states, if there is two branches and you are supplying between these two branches, and these two branches have only one single GSTN. In such case, you will be issuing a DC for another branch for the purpose of movement of this goods. So in such case, you don't have to raise any invoice because the document involved is not an invoice, rather it's a delivery challan. So there is no requirement for raising an invoice. But where the document involved is an invoice, in such case, you have to raise an invoice. So how does a IRN look like? So this is how an IRN look like. It's a 64-digit alphanumeric character. So each IRN shall be unique. So in such case, it's like millions of possibilities to generate an IRN. So one IRN shall not be same as the other IRN. So that's what we have to understand. And so coming to this e-way bill part, so based on IRN, can we generate any e-way bill? So when you are raising this e-invoice itself, you feed in a lot of details in the e-invoice. So whether based on this e-invoice details, can you generate a e-way bill without separately feeding details in the e-way bill portal? Yes, you can generate e-way bill based on the IRN details. So that is details provided for the purpose of IRN. You can very much generate an e-way bill. So whereas for a cancelled IRN, so if you are cancelling an IRN within 24 hours, on that IRN you cannot generate any e-way bill. So only on IRNs that are active you can generate an e-way bill. And subsequently, whether e-invoice be cancelled when an e-way bill is active or verified by the officer. So the officers in checkpost might verify your e-way bills. So if at all it's verified, there's no possibility of cancellation of this e-way bill. And similarly, if the e-way bill is active in state and it's generated based on an IRN, that is invoice reference number, whether an IRN corresponding to that e-way bill can be cancelled. So in such state, that is when the e-way bill is active, you cannot cancel any IRN. What you have to do is you have to cancel the e-way bill first and then cancel the IRN. So this has to happen within 24 hours. That also you have to remember, because for the purpose of IRN, the time limit is 24 hours. Within 24 hours, if we have to cancel the IRN means you have to cancel the e-way bill also within 24 hours from the date of generation of IRN. So we have to be careful on that. And after that, there is no possibility of cancellation of IRN. So even if you cancel the e-way bill, there's no cancellation of IRN possible. And if not verified by the officer, there's no possibility of cancelling the e-invoice, because the very e-way bill itself cannot be cancelled, and in such scenario, e-invoice also cannot be cancelled. So these are a lot of frequently asked questions by a lot of people whom we come across, like a lot of clients we come across. So if anybody else has some issues on generation of e-invoice, can very much ask in the chat, or turn on your mic and you can ask, so that we can clarify it. And I shall just present you how to generate an e-invoice also right now. So we'll just take 2 minutes for seeing how an e-invoice JSON can be generated, and how an e-invoice looks like when it is validated also. Yes, so yes, this is how the invoice generation tool looks like. Um,
Participant, any other?
Yeah, so I hope it's visible. This is how the tool looks like. So there are 4 different types of tools, like Form A, Form B, Form C, and Form D. Each varies based on the details which you provide. So each will have like mandatory fields, and will also contain additional fields. So say for example, payment related details and batch production related details. You can also feed these kind of details for the purpose of generation of e-invoice, but that's not a mandatory column. If you want, for the purpose of tracking your batch and other things, you can very much have that in this invoice data, so that for your future reference you can use it. So that is the purpose of having 4 forms, and each form has its own details requirements. So the mandatory column remains the same, whereas the other details, other extra details that is required by the form differs. So I'm just taking the simplest form of all, Form A. So it shall contain only the required details for the purpose of generating one single e-invoice. So there are a lot of mandatory columns. So that's that is marked by this red asterisk mark, and I have filled all the pre-filled all the required details. So once I fill all the required details, similar to how we do for the purpose of GSTR1, generation of GSTR1, I have also to should also fill this profile details. Profile details is the supplier's detail. So I have also should also fill the supplier details here, and invoice related details here, and have to validate this very statement. And once validated, I can generate a JSON. This JSON, what I can do is I can upload it to the portal. So since we don't have any credentials with us, cannot actually uploading this to portal. So once it is uploaded to the portal, what happens is a JSON shall be generated by portal. So this return JSON will be a signed JSON. Signed JSON means it shall be digitally signed by the invoice registration portal. Return to you this JSON. What you can do, you can to the invoice portal and verify the validity of the JSON. So we already have a signed JSON with us. So I'll just upload that to the portal and show how an invoice looks like. So yes, this is the link for verifying your signed JSON. So once you have a signed JSON, what you can do is you can verify it through this particular link, and I have signed JSON with me. So I shall be uploading that JSON to the portal, and once I give submit, uh, sorry, actually, I have some trouble with relation to this invoice uploading. So sorry for the trouble. So probably I can show it in another time or something like that. So there's this sample invoice itself which is available in the invoice system. So I'll just use that itself for the purpose of showing the invoice. So yes, this is how a invoice looks like. So this is the QR code that is generated for the purpose of invoice, and this is the IRN number. So it's a 64-digit number which is generated for the purpose of invoice. So you can very much use this QR code and IRN in your own format of invoice. So probably you will attach a logo for your invoice and other things for your invoice. So if at all the client has to attach a logo or something like that, they can also use this QR code and IRN in their particular format of invoice and issue the invoice. So yes, we also saw how an invoice looks like. So summarizing, invoice actually started with the applicability started with those who has turnover for exceeding 500 crores, starting from 1st October 2020, and then subsequently 100 crores got notified. Now it's going to be 50 crores. Probably in going on, it shall be 10 and 5 crores also. So this out, you know, so we have to be more, oriented towards ready towards this particular thing. So we have to advise our client on this particular aspect. So uh, the value, the notification may come at any point of time. So we have to inform this to all of the client irrespective of the turnover, because what we think is probably for the persons who has turnover more than 5 crores also, for those persons also, in a short period of time, probably in the end of the financial year or something like that, I mean next financial year or something like that, this very invoice may be applicable. So for the readiness aspect, we should be proactive and inform our clients on this very aspect. So if anybody has any doubts on this particular aspect, you can very much ask, and um, ask in the chat, and probably we can, once the doubts are clarified, we can end the session.
Members, if you are having any doubt, you can unmute and you can ask, or you can chat in the chat box.
Sir, this is Shivakumar here.
Yes.
Sir, one of my clients have 5 registrations, one with exceeding 50 crore in Tamil Nadu, and other 5 registrations across India, other states. There they doesn't have this 50 crore turnover. How do I aggregate, sir? Should I raise the invoice for the other states also?
Yes, sir. Yes, sir. We have to generate the invoice for the other states also, because the mentioned thing is aggregate turnover. So when it comes to aggregate turnover, we have to refer the CGST Act, which is PAN based. So 26 says it's PAN based. So we have to consider as a whole totality.
Sorry, sir. In case of a branch transfer from Tamil Nadu to Telangana?
Yes, we have to consider that also for the purpose of supply, because the very thing is B2B supplies. So where the Telangana is also registered and this branch is also registered, it shall account to a B2B transaction, and we have to raise an invoice for that also.
Thank you, sir. Thank you.
Members, any other queries? Or we can wind up. So before calling our secretary to...
Sir, this is Nadu, right?
Yes,
Yes, sir.
tell me.
I'm having one doubt. One of my clients in poultry industry, they are selling live birds.
Okay, sir.
The value is crossing 75 crores.
Okay.
Which is exempted.
Okay.
But they are selling old gunny bags and equipments to the farmers.
Okay.
It will come around 60 lakh per annum, which is taxable supply. Whether it is mandatory.
So in such case, sir, actually speaking, if at all that gunny bag sale is a B2B sale, so you are saying it's to a farmer. So what I suppose is it's a B2C sale. So B2C sale doesn't get covered under invoice portal. So they are notified person, obviously, because for the purpose of aggregate turnover, we have to consider exempt turnover also. But whether e-invoice has to be generated for the transactions or not means no, it is not required, considering the farmers are B2C persons, that is they are unregistered person. If we are selling it to a registered party, so if the scrap sale customer is a registered person, in such case we might have to generate an e-invoice. In all other cases where you are selling live chicken which is exempt, there you are not required to generate an e-invoice. Similarly, if the farmer is an unregistered person, then we don't have to raise an e-invoice. Only when the case where you are selling this gunny bags to a registered person, so taxable sales to a registered person, then we have to generate an e-invoice, because the aggregate turnover has crossed 50 crores.
You have to raise gunny bag sales For Canny bag sale only, invoice is mandatory. For remaining, not required. Am I correct, sir?
இல்ல சார், அதான் இப்போ அந்த farmer is a registered person, registered under GST na we have to raise an invoice because it's a B2B transaction. Ana if he's an unregistered person na it's a B2C transaction. B2C transaction is not covered under invoicing for time being. So adanala we don't have to raise for B2C transactions. So if any other person is getting this particular gunny bag sale, that is the customer is a registered person other than farmer or somebody like that, probably we have to raise a invoice.
For that Canny bag sale only.
Yes, yes, yes,
Okay.
yes.
Thank you.
Yes, sir. Thank you.